You got some big name retailers, Walmart, Best Buy. You've also got companies that make everything from the shampoo brands that Americans use on their hair down to the shoe brands. Little by little, the costs of President Donald Trump's tariffs are starting to show here in the U.S.
When President Trump expanded tariffs on over 70 countries on August 1st, the goal was clear: bring jobs back, secure leverage, and force new trade deals. But within just days, the consequences are being felt, not in Beijing or Ottawa first, but in Detroit, Dallas, and the daily lives of American families.
One Detroit auto supplier says he's going to have to lay off employees and close a warehouse because of the president's tariffs.
Went to India to procure products from there, trying to save our consumers money. And now India is hit with tariffs. So everywhere we turn, we're starting to see more and more roadblocks. So it's been quite discouraging.
Major U.S. companies are sounding the alarm. In the second quarter alone, General Motors reported $1.1 billion in tariff-related losses. Ford followed with $800 million. Stanley Black & Decker, a key name in American manufacturing, projects an $800 million hit for the year. Apple, anticipating the impact, has already budgeted $1.1 billion in tariff costs for this quarter. These aren't isolated cases. They represent a broader trend across sectors. Retailers like Walmart and Best Buy have begun passing costs onto consumers. Items as simple as shampoo and shoes now carry silent surcharges. And it's not just speculation. Reuters has tracked explicit price hikes tied directly to tariff pressure. Even the morning cup of coffee might not be spared. The U.S. imports roughly a third of its coffee from Brazil, a country now hit with new tariffs. Economists warn that this could be the moment when the American public truly starts to feel the pinch.
As we're seeing kind of these sectoral hits and the impacts of tariffs really showing up in places like cars, vehicle parts, and energy. But energy dropped almost 20% in Q2. Obviously, that's going to be hard hit in Alberta as well as the rest of the country.
North of the border, Canada was hit with a 35% tariff starting August 1st, targeting goods not covered by the USMCA, including steel, aluminum, softwood lumber, and many auto parts. The impact is significant. In the second quarter of 2025, Statistics Canada reported a 13% drop in total exports, with energy exports down nearly 20%. This downturn hits Alberta hardest. Auto parts and consumer goods were also among the steepest declines. But rather than strike back with emotion, Prime Minister Mark Carney is opting for a different approach. Not retaliation, but repositioning. Canada isn't just reacting, it's adapting.
Now, Canada is looking to boost trade with its other North American trading partner, Mexico, as both countries try to work out a trade agreement with a volatile United States under President Donald Trump.
This week, Canada's Finance Minister, François-Philippe Champagne, and Foreign Minister Anita Anon traveled to Mexico City for high-level meetings. Their agenda: reinforce trade ties and reset diplomatic relations with Mexican President Claudia Sheinbaum. It's a calculated shift. Earlier this year, when some Canadian leaders suggested cutting Mexico out of the USMCA, tensions spiked. Now, the goal is realignment. With the 2026 USMCA review approaching, both nations recognize the value of mutual support, especially with Trump favoring bilateral deals. Notably, Trump granted Mexico a 90-day delay on additional tariffs. Canada received no such extension. This disparity has fueled Ottawa's urgency to solidify Mexico as a regional partner. In 2024, Mexico accounted for only 1% of Canadian exports, but officials see room to grow. Trump's approach is blunt force: raise tariffs, pressure partners, and count on American resilience. But the economic blowback is now quantifiable. In just 4 months, the U.S. manufacturing sector has lost between 30,000 to 40,000 jobs, according to U.S. labor data. Carney, by contrast, is choosing strategy over spectacle. His government is investing in trade diversification, protecting vulnerable sectors, and leveraging long-term relationships, rather than chasing short-term wins. It's a striking contrast. One leader fuels instability to force deals, while the other builds resilience to navigate uncertainty. From coffee beans to car parts, Americans are beginning to see the cost of tariff politics play out in real life. What started as a foreign policy tool is now cutting into corporate earnings, family budgets, and job stability. Trump's trade war may have aimed to punish competitors, but today, the collateral damage is accumulating at home. Meanwhile, Canada isn't waiting for Washington's mood to shift. It's building new bridges, and that quiet shift may turn out to be its strongest response yet.
The fourth largest producer of oil and gas in the world, Canada exports 97% of its resource to the U.S. 60% of oil and gas that goes into the United States comes from Canada.
Donald Trump says he wants to protect American energy, but what if he's quietly weakening the very foundation of it? At a time when energy security is more important than ever, the U.S. still relies heavily on imported oil, and most of that oil, about 2/3, comes from one place, Canada. Yet Trump's own trade policies are threatening to disrupt that flow. How did we get here, where the United States needs Canadian oil more than ever, but Trump's strategy is pushing it away?
It seems not very exposed because it's the one thing the U.S. hasn't really put any tariffs on so far. I think they recognize they need our oil and gas to provide energy security for their country, and that if they tried to put a tariff on it, they'd still have to buy it. It would just mean higher consumer prices.
Canada supplies between 50% and 70% of all U.S. oil imports, averaging around 4 million barrels per day, according to the U.S. Energy Information Administration. This isn't just about volume. Canadian crude is uniquely suited for American refineries, especially those in the Midwest, which were built to process heavier oil grades, exactly what Canada produces. And unlike oil from OPEC nations, Russia, or Iran, Canadian energy comes from a stable, democratic neighbor. It's not subject to sanctions, political manipulation, or military conflict. Washington knows this. That's why, even as Trump imposed sweeping tariffs on Canadian steel, aluminum, and manufactured goods, he kept oil mostly exempt, for now.
The refineries will have to jack up prices if tariffs go on that oil. It could be 50 or 75 cents a barrel, and particularly the Midwest refineries in Minnesota and Illinois and some of those swing states.
But that exemption doesn't mean safety. Trump's trade doctrine is built on threats and uncertainty. As part of his hardline America First push, he's warning of 35% tariffs on all Canadian exports, oil included, if Canada refuses to sign a new bilateral deal. Currently, Canadian oil faces only a 10% tariff, but repeated threats of escalation have already shaken investor confidence. When companies can't predict tax levels or border access, they stop planning for long-term growth. According to ARC Energy Research Institute, total investment in Canadian oil and gas for 2025 is down 25% compared to the average of the previous 3 years. That means fewer drilling projects, fewer pipeline expansions, and no increase in supply to meet U.S. demand.
In Ukraine. So there's just so much uncertainty right now that for investors and for companies, it's very difficult to try to decide, are we going to, drill more wells, or are we just going to let it ride the way it is?
That slowdown is already hitting infrastructure. Canada's biggest export pipeline, Trans Mountain, is running near capacity. Major pipeline proposals like Energy East were canceled years ago, and with political risk and cost inflation on the rise, new projects remain stalled. To compensate, Canada is trying to boost output through short-term upgrades, but those are band-aids, not solutions. This bottleneck makes the U.S. energy system more fragile. A single disruption, whether from maintenance, weather, or sabotage, could tighten supply, spike fuel prices, and put refiners in a bind. Instead of shoring up a critical source of energy, Trump's policies are injecting risk, the opposite of energy independence. Facing pressure, Canada isn't backing down. Prime Minister Mark Carney has taken a firm stance. Canada won't sign a bad deal just to dodge tariffs. Carney understands the leverage. Trump can threaten, but he can't afford to lose Canadian oil. That's why Ottawa is buying time, holding the line, investing in domestic resilience, and reforming its energy sector to attract long-term capital again. At the same time, Canada is diversifying its trade partners, strengthening supply chains with Europe and Asia to avoid over-reliance on the U.S. market. Rather than panic, Canada is playing a longer, steadier game. Trump believes tariffs force countries to fold, but with Canada, his tactics are backfiring. He hasn't pushed Canada into a deal. Instead, he's triggered a pullback in energy investment, weakening a cornerstone of America's fuel supply. The irony is stark. In trying to make America stronger, Trump may be making its energy future more vulnerable. So the real question is, how can you win a trade war if your own energy supply is the first casualty?
Consumer boycotts are the reason that President Trump and some of his team have referred to Canada as being mean and nasty to deal with.
Ontario's premier says Canada needs to match President Donald Trump's tariffs dollar for dollar.
Donald Trump doesn't usually hold back, but this time, his words triggered something deeper than political drama. Standing before a crowd of business leaders in Washington, his hand-picked ambassador to Canada explained why Trump sees Canadians as mean and nasty to deal with. Not because of military threats or major trade violations, but because Canadians are quietly boycotting U.S. travel and refusing to buy American alcohol. On the surface, it sounded like a throwaway insult, but what it revealed was something far more telling: that the Canadian public's grassroots reaction, one without protests or megaphones, was working. It began with tariffs. Steel, lumber, aluminum, sectors deeply tied to Canadian jobs, were suddenly slapped with high U.S. duties in early 2025. Then came the rhetoric. Trump's remarks about Canada taking advantage of America sparked anger and confusion. Instead of shouting back, Canadians changed their habits. By July 2025, according to data from international travel platforms like Hopper and Expedia, flights from Canada to the US dropped by over 26%. Alberta and British Columbia led the decline. Meanwhile, Canadian liquor boards from Ontario to Quebec reported a dramatic drop in American alcohol sales. In some cases, shelves were restocked entirely with domestic or European brands. At the same time, retail movements like Buy Canadian surged. Independent shops across Ottawa, Montreal, and Vancouver said their sales of Canadian-made goods had doubled compared to the same period last year. What started as a reaction became a movement, and it got Washington's attention.
Obviously Canadians are outraged. I say Canadians, stick with it, hold the line.
BC Premier David Eby says Hoekstra's remarks show Canada's efforts to stand up to Trump are, quote, having an impact.
If Trump thought provinces would buckle under pressure, he misread the room. British Columbia Premier David Eby publicly challenged the tone coming out of Washington. He didn't just defend the boycott, he said it was proof that Canadians were finally being heard. In Ontario, Premier Doug Ford took a different but equally firm approach. Instead of backing down, he called on Ottawa to respond with equal tariffs, dollar for dollar. In his words, showing weakness would only invite more pressure. Across the political spectrum, premiers aligned on one message: Canadians have the right to protect their economy and sovereignty, even if that means spending differently.
We should note
to our friends and neighbors in Canada, the Granite State sends you our greetings and says we miss you.
The ambassador's comments may have sparked outrage, but not everyone in the U.S. echoed that tone. Just days later, a bipartisan group of U.S. senators visited Ottawa. Unlike the ambassador, they didn't criticize Canadians. They expressed concern. New Hampshire's Maggie Hassan and Nevada's Catherine Cortez Masto noted how their states were already feeling the pain. Canadian tourism was down, shopping districts were quieter, and hospitality jobs were at risk. In Nevada alone, Canadians usually account for 30% of international visitors. That number has sharply declined this summer, and with it, millions in revenue. What Canadians chose to do with their vacation dollars was no longer a small matter. It was reshaping cross-border economics.
Many in Ottawa say Trump's rhetoric just strengthens their resolve to buy Canadian and boycott travel down south.
Some might say skipping a trip or switching a brand is too small to matter. But collectively, these choices created pressure, the kind that even Trump's administration couldn't ignore. This wasn't about emotion, it was about agency. Canadians didn't need to shout, their wallets spoke for them. And if those choices made them seem mean and nasty, then perhaps that label was never really an insult, but a sign of strength.
I think Trump is Trump, and we listen to him, and then we just let one thing, what he says, go through one ear and out the other.
In the end, this moment isn't about diplomatic language, it's about posture. Trump may dominate headlines, but Canada, quietly and collectively, is demonstrating resolve. Not through threats, not through deals, but through everyday decisions made by people, provinces, and premiers to stand their ground, protect what's theirs, and define what kind of neighbor they choose to be. Because if mean and nasty means refusing to bow under pressure, then Canada is wearing it well.